What's up, YouTube? I'm on my second video of the day. Why the hell not? I work from home tomorrow and I don't seem to be able to make videos when I'm home, so there's no time. The only time I have of peace is in my car, so this is why I make commuting videos. I know the sound quality sucks, I know the video sucks, but I'm dealing with what I have, working with what I have, and I'm hoping eventually this could turn into something really good, and then I can have more time, to make videos at home with better quality, better subjects, if I could ever build an audience. But if you're watching this, I greatly appreciate it. Again, just hang in there. The videos will get better and better. I promise you. They can't get worse, right? So anyway, I want to talk about, interest rates, and mainly what the poor people, broke people, everyday average people should care about, or at least know about interest rates. Because the average person, they hear interest rates, they don't really care. They don't, Feds raise interest rates, yeah, whatever, move on with my life. They get credit cards, they pay whatever the interest rate is, But I just want to talk about a few main topics when it comes to interest rates that it's kind of good to know, and it's kind of bullshit once you hear it. I did write them down, so I'm cheating today. I'm not going right off the top of my head. I have a little cheat sheet. But I want to start with banks. So, because everyone knows this, you grow up, you get your first job. What do your parents tell you? Oh, put the money away in a savings account. Why? You'll earn interest. If you're as old as me, you remember the freaking booklets. You go to the bank maybe once a month, once every 2 months, and you see how much interest you earned, and you get all excited. Interest rates have since lowered, but even then, the interest rates on a normal savings account is just it's just pathetic. You might as well just keep your money in a goddamn safe, because there is no point, or there should be no expectations at least, of earning any money on your money in a savings account. I was just looking online, and most of the bigger banks, the current rate, by the way, it's August 2018, but the current rate for a savings account, if you're holding a balance less than $50,000, is 0.01%. If you're, first of all, the majority of people that try to save have less than $50,000. If they have more than $50,000, they're more than likely to have their money elsewhere, because they're either listening to a financial advisor or they know what they're doing by that point. But the majority of people that still think that they should just put their money into savings have less than $50,000. So I'll just say the majority of the people are earning 0.01% APR annually on their money. You know what that is? You know what 0.01% is? That's nothing. So, no matter how much money you have, it's don't expect to get too far with 0.01%. That's all I'm gonna say. And that's for the year again. So you'll get a penny. I think they round up for you. So, assuming you don't earn that penny, I think you get a penny a month. I don't know. They might not even give you that, but who knows? All I'm saying is the days of teaching your child your money should be in a savings account. I don't know. I don't agree with that anymore. It's a waste. Because when you're younger, when you get your first job and you make money and you're saving money, you don't need that money. So you could put it elsewhere. So why put it in a savings, which is, the main reason the rate's so damn low is the money, they know the money's always liquid, so they can't invest it. They can't invest people's money that are in the savings account because you could pull it out at any time. And if they had that money locked up in something else they're making money off of, so they're in trouble. So, I wouldn't, let's just move on. Savings accounts, it just makes me sick even thinking about it. But we'll stick with banks. Another method that people typically would recommend are CDs. And the normal CDs, I guess we'll just call it a 5-year CD. Basically you give them your money, which of course has a minimum. You need $2,000-3,000, whatever. You give me your money. You can't touch it 5 years. I'll give you 2 to 3% annual return. Okay, so you're basically saying, take my money, make more money off of my money, and pay me a small fraction of what you made. So again, I think you get where I'm getting at, but trying to save your money just with a bank, like on your own, thinking through CDs or just a savings account, you're not going to get very far. You're not going to, make too much interest or compounding interest. You're going to, again, a CD is at least, it's not even a guarantee. It's based on a variable rate half the time. So 2 to 3% variable rate, again, that's nothing. Especially you're committing your money to be locked up for 5 years. You can do a lot better. Now let's look at the reverse side. When you're young and you have a job, you're making shit. You're making minimum wage, right? You have champagne taste. You want to buy shit. You want to get a credit card, right? You want to build your credit. So what are the rates that the credit card companies charge you, right? And the last I looked, it's around anywhere from 14 to 24% annually. So if you borrow money from, again, these are the same banks, a bank, they'll charge you 14 to 24% APR on that money. Obviously, they calculate it to whatever it comes to daily, because you get a monthly bill, but you get the point. If you keep your money with them, $1,000, they'll give you 0.01%. It's very, very generous. But if you borrow $1,000, they'll charge you 14 to 24%. When you look at it this way, the whole thing is fucked up. And obviously, they have to do this in some aspects because they lose a lot of money from deadbeats who just don't pay their bill, claim bankruptcy, and then they have to make a settlement, things like that. Or people pay late, or, it's a lot that goes into it, but still, 14 to 24%. I think 24%, a quarter of the freaking money. That's insanity. I don't know. And then there's things like, if you're like me, you got into credit cards early and you kind of drowned in sense, and you can never catch up. And then there's things called 0% balance transfers, which I always had to do, but they always had a balance transfer fee. And in reality, if you sit there and look at the fee, yeah, it's not the 14 to 24%. It's like still it could be like 10%. So you're honestly, they're charging you, they're fronting you already 10% of whatever, say your balance is. knowing the majority of this freaking country is broke. The reason they're doing a balance transfer is because they can't pay it off. What's another 12 to 18 months? Nothing. They're probably going to build more debt. So they know that balance, on top of the balance transfer fee, they're making their normal APR. I mean, it's a win-win. That's why when you have a decent credit score, all you'll see in the mail, 0%, 0%. Ooh, sounds great. But you have to think to yourself, can I actually pay it off? And is it worth it in the long run? If you can get a low balance transfer fee and pay it off before the 0% is over, do it. Done. But again, the reason you're doing a balance transfer is because you can't pay it off. And 12 to 18 months, although it seems like, oh yeah, no problem. Nope. Still broke. Still struggling. Sorry. Anyway, let me go to a better topic, such as your mortgage rate. I mean, it's not really better, but let's talk about mortgage rates. Their average rate, I think, right now is 4.6%. I mean, it's aggravating too. It seems like, yeah, okay, the rates are still low enough that you're not getting ass raped when you when you get a mortgage. But when you sit there and look at it, 30 years, I mean, on a $300,000 home, 4.6%, woof. I mean, it's a lot of money. But again, who has that? Who has the money to front, you know? But, and on top of that, other bullshit with mortgage is if you don't give 20% down, then you have to pay this bullshit PSI, which is some type of mortgage interest, and you have to pay that for at least 5 years, and when you reach the balance within, that's, I think it's 78%. So you have to pay it off at least, I guess, 22% of the value. The way they calculate it is just bullshit, but just think about a minimum of 5 years. You're paying an additional 150, whatever, in mortgage interest, they call it. So, number one, who the hell is 20% to put down? And number two, that's kind of like buried in there. This bullshit PSI, I had to pay that for fucking, until I refinance, but I don't know. Maybe this wasn't a better topic. Moving on. School. College. Oh yeah. What are the rates on college? Well, from what I gathered, undergrad 5%, and graduate degrees 6.5%. Just think about it. I know most parents, they try to help, but what parents can afford to actually pay for their kids' college? So most kids are borrowing money over 4 to 6 years. Room and board, that shit adds up. So, and I know they have to pay, I guess, while they're there, some amount. I'm not really sure how it works. I'm not a college graduate, although I tried. All I got out of it was debt and no degree. But anyway, these poor kids that graduate, they automatically have, say, $100,000 loan at a 5 to 6% rate. So you're starting your job, obviously, probably making less than them, probably half of that, and you're expected to pay off a loan for for double what you're making. Just think about that. On top of living expenses. Typically, most people, when they graduate, either they're used to living on their own, so they want to continue it, or their parents are saying it's time to move out, enough's enough. They want to downsize themselves. But, I mean, if they really cared about students, they would do something about the rate. Not only the cost, but, I mean, try to control the rate a little. Again, I know the banks, they try to save themselves, but as far as I know, you cannot claim bankruptcy on student loans, so they're getting their money. So what's the problem? Lower the rate. Give these fuckers a break. And make college free. How about that? Yeah, right. No, just make it cheap. Make it worth the while. It's getting to the point where it's not even worth it anymore. But that's another topic for another day. Anyway, savings bonds. It's probably the longest video I ever did. Savings bonds. Are they worth it? They always were, from what I understood. Talk about like treasury bonds. You go to the bank, you buy your nephew, your son, someone a bond. You pay half of if it's a $50 bond, you pay half the price, $25, and they say it matures in 20 years, meaning it'll mature and make it to the $50 in 20 years. So, and apparently, I think they guarantee it. So, I guess you automatically double your money in 20 years. Wow. I mean, it sounds, I don't know if that sounds great to anyone, but it's pretty weak. But they also pay additional interest, which I'm not sure how they calculate that part, but they pay interest on top of that. So, and if you can make it to 20 years and the bond is worth double what the person paid for it, you can make maybe a couple cents interest. Woohoo! Don't forget about inflation. That won't, if the interest wasn't pathetic enough, inflation will destroy the value of the bond. So, I don't know. I don't know if anyone even owns a bond or buys bonds anymore. But I haven't worked at a bank in a while, so who knows? I mentioned inflation. So that apparently the current inflation rate is 2.9%. So when you think about what you're earning annually, you have to subtract 2.9%, at least currently. So, so you're making negative money if you think about it. If you leave your money in the savings, you're losing money. Duh. No brainer. Half the freaking options, you're losing money in. The CD, what I say, it's 2 to 3%, 5 years. After those 5 years, if inflation rate stays 2.9%, you gained nothing. You just lost time. That's basically all you did. So, I don't know. Never knew all this, until I looked into the stock market. The stock market makes you think about money a lot differently than how you would as a normal, everyday human being that just has a savings account, a checking account, they get paid and they just, they put away what they can there and that's it. They have a 401k, they don't know what the hell they're doing with that either. But as you look into the stock market, it's there for you. Just use it, utilize it to your advantage. It's not as complicated as you would think. The stock market average overall, I think they said in the last 10 years, is 10%. 10% return a year overall. And just think about like if you knew what you were doing and how much you can make every year. But just take the average for now. So, say 10% a year minus inflation, you're still making 7% a year. And your money's not locked up. When you buy stocks, you can sell them whenever you want. Obviously, you don't want to sell them when they're down, but I'm just saying, it's, when it's with a mortgage broker, if there's no fees, if you're using Robinhood at least, you buy and you sell whenever the hell you please. But yeah, so that's basically what I want to talk about on interest rates. And again, you have to think about the whole picture. Should you use a credit card? Is it good ever to just have a balance on the credit card? No, hell no. If you're going to use a credit card, you have to be able to pay it off the next month. That's the only way it makes sense. I know people use it, to get points, but again, they use the card, they pay it off immediately. So those points, it's all gain. But when you use the credit card and you're not paying it off and you're getting the points, they're still making a killing off of you. Those points don't mean shit. So anyway, my recommendation to anyone, just think about all that and think about money and how you should treat it when you get your first job. Doesn't even have to be first job, but when you're not as deep in the hole, you don't have a mortgage, you don't have a car yet, think about money differently. Think about how you should save it and how you can make the most of it, and think about down the road. Your younger self will love you. I hate my younger self. Definitely did not help me. But anyway, that's it for interest rates for poor people, broke people, average people, whatever. Hope you enjoyed it. Time to go to work.